Audit reporting is one of those topics where people can get really a bit messy with. So it's one of those topics where you really need to strip it all the way back and then start to kind of build your foundations up, because if not, you can get lost in the 4 different types of opinions and the 4 different or 3 or 4 different types of reports, depending on if you're a UK student or not. So you really need to just kind of take a little bit of step back. So I'll go through this. I'm an audit examiner. I work for several exam boards. I teach audit all the time. And so let's kind of really cut through that mustard. So first bit, where we're trying to understand is where reporting sits. Now, what I'm going to talk about today is just the audit report, the main outcome of that audit report, okay? That one single thing that the client is paying for at the end. And so it goes all the way at the end, okay? We don't do it in our planning, where some people get messed up in trying to say, oh, there's a risk and this might impact the audit report. No, we just don't talk about it, okay? We only really talk about the report if we're talking about incompletion, if you're doing a kind of more technical question, or we talk about the report itself in a very direct question the examiner is going to ask us. So all of this life cycle, all we care about is generally talking about the report when that specific question comes up. So we're only going to talk about the independent audit report. Okay, it's the main one. That's the one the statutory auditors do. They're the only people who write that report. So just again, keeping that on our mind. We don't want to talk about this in the case of like an internal audit or anything like that. Now, first thing with the opinion, the unmodified opinion means nothing's changed. It means we agree with the financial statements. They must show a true and fair view. And that's the outcome that we talk about. That's the one where it's in the templates for every firm. They hope that every single one of theirs ends up like that. But in reality, it's not. Okay. So that must mean there are no errors, no disagreements, and there's no evidence that's missing, okay, that very, very crucially is material. Okay, there can be errors, there can be disagreements, and there can be missing evidence that we can't obtain, maybe because it's in a country we can't go to, for example, or the evidence has been lost because there's been a problem with the system, or maybe it's an old company with some kind of paper records. But the absolute crux to this must be you must do that assessment of whether it's material, and that will be the key thing that decides very likely whether you get 1 mark, half, or 5 marks. So that's going to be a real crux bit, is where does that opinion then take you after? So they must agree with the financial statements as a whole. Okay, we don't have to agree with everything, but at least materially we think everything's okay. Now, what that might mean is something like this. Okay, so this is just Burberry's report from this year or last year. There's a true and fair view. There's lots of other stuff that's in that opinion that we don't really have to worry about too much, but something like, in our opinion, the financial statements show a true and fair view. That's all we care about. The rest of it is just kind of nice fluffy stuff. Okay. Whereas as we change that opinion, there must be almost exactly the reverse of that. There must be a material problem that's an error, it's a disagreement, or it's a lack of evidence. Error being the client has done something accidentally wrong. Disagreement being auditor versus the client, something that we think is incorrect. Most likely it's going to be a subjective thing. Okay, so yeah, you know, in a simple exam, it might be the useful life of an asset. Okay, in a more complex scenario, it might be whether the company's going to have profits in X amount of years to be able to claim back their deferred tax assets. Okay, again, depends on how complex the exam is. And the lack of evidence hopefully is a bit more clear, that it must be, again, a material lack of evidence. But that's going to be a bit harder to judge in the exam. So if it's going to have a modified opinion, these are going to be like the 0.1% of opinions around the world. And so it's pretty difficult to find these, okay? But yes, the outcome of them is not normally a positive thing, and the impact of it could be really, really significant, but it's likely stuff happened. It's not the company collapses because the audit report was a bad report, if you want to name it as a bad report. Something's already going wrong, okay, but the ripple effect is pretty big. Okay, so like here, there was a big issue with an EY audit, okay, and then the company closed pretty much within a year. Now, how do we approach reporting questions? So now we've got that really, like, hopefully clear thing in our mind that if I'm saying it's a material error, disagreement, lack of evidence, it must change the opinion. If I don't assess it's material, then I must have to say it's an unmodified opinion. That is worth 2 marks. Just that bit that you're talking about is worth 2 marks on its own. Okay, and I'll show you how in a second. So first up, How do you approach any reporting question? Okay, whether it's a multiple choice one or whether it is a long form written question worth 5 or 6 marks, which is some of them are worth 5 or 6 marks, even more if you're doing like a higher level exam. So first bit is you're going to have to discuss something. So in 80% of cases, this is going to be a financial reporting. So this is whether something's a provision or not a provision, for example, whether something a determination of a contingent liability is correct. Yeah, the complex ones are is there an adequate disclosure, but you're not going to be assessing whether a disclosure is adequate. It's too complicated for almost any exam to be able to look at a disclosure because it's so complex and so subjective. So we are looking at something where we can apply our financial reporting treatment. And in some cases, it's not that. Okay, if it's not that, then it's likely to be something that probably has an effect on a lack of evidence, or it's something that's going to have an effect that causes a different paragraph. Okay, that's a whole different thing, whole different video. Okay, so step 2 is going to be the thing that sends us off the right way or the wrong way. So is it material? Okay, is it something where we can use our defined thresholds to determine if it's material? And that will be the nice easy bit. So step 1 was worth 1 mark, maybe 2, probably possibly more in a higher level exam. Okay, but most exams assume it's 1 mark. Okay, max 2. Materiality is worth 1 mark. If they tell you it's material, it's not really worth much. Okay, it might be worth half, maybe even nothing. But if they haven't told you, then this is great. This is like a free mark. Okay, in most cases, it's a free mark because it's so easy to get. Okay, because you need to use these thresholds. You need to say, is it 0.5% of revenue, 1% of total assets, 5% of profit tax? Now you can determine that really easily in most cases because they give you the number and they say something like, profit for tax is 7 million and this issue was £500,000. Okay, voila, we've got our determination really nicely. And all you need to say is something like it is 6% of profit for tax and therefore it's material. You don't need to show the calculation in brackets. You don't need to say 5%, 6% is more than 5% because we got that right. Some of them are by nature. Okay, some of them where it's like related parties. Some things you can argue fraud is. Okay, but there are other things where you determine it. After that, let's look at a little scenario. So, okay, in this case, financial reporting, right? So a factory, I'm a terrible person, so I made a whole factory redundant, okay? And I told them that before the year end, okay? But I don't want to recognize that provision, okay? Now, I've told them before year end, which means I'm committing to probably some redundancy payments. That means probable outflows, right? It's a provision, it's a liability, okay? So again, stripping out lots of complexity behind this, but that is even a more complex one you'd get at a middle level. So they don't want to recognize it. So if I mention the financial reporting issue as a starting point, I'm going to get at least a mark for that. Okay, the fact that it's provision because and why this becomes a provision, maybe 2 marks. But I'm given some figures. Okay, so if I use my lovely basis, this is a provision. I've been given total assets. If it's 100,000, okay, so if I was now the audit person and it was 100,000, I'd go 100,000, 100 million. That doesn't sound like it meets the threshold. No, it doesn't. Okay. And there's nothing really by nature that's telling me it is. So 1 mark at least for the financial reporting, 1 mark only for the materiality. So you've got 2 marks. Okay, that's nearly halfway to getting full marks on most questions that are in reporting, unless it's a multiple choice. So opinion unmodified, even though you're like, but there's £100,000 error, there's £100,000 issue. Well, it's a disagreement really. Doesn't matter, it's unmodified because the issue is immaterial. Okay, so voila, the issue is immaterial, unmodified opinion because it's immaterial, 1 mark, and voila, that's it. So unmodified opinion questions where there's no extra stuff going on aren't worth normally as many marks. Okay, let me change that figure. I'm like, okay, now I can see that 10%, right? Because 10, 100 million, right? I can see it's 10%. That changes it really nicely. Voila, it meets the amount. It determines that it's over that 1% threshold for total assets. Okay, so it's 10% of total assets, therefore it is material. And then that affects my opinion. Okay, it's going to change my opinion, but you need to be specific about how it changed your opinion. But what you again need to remember is that by this point, if I've written a sentence or 2 about the financial reporting and I've written about materiality, again in 1 sentence, then I'm already on at least 2 marks. Okay, so I'm doing well, right? 1 more mark and I've probably passed most questions in every single exam that I could do on a written question. Now we're like, oh, this is going to be a bit more tricky. Okay, so if you're someone who's sitting ICW's corporate reporting, data assurance, this is more likely there. If you're sitting corporate reporting, if you're sitting advanced audit, whatever it is, this is more likely to be a higher level answer, but it can be something that creeps in the professional level. Okay, so if we had something like this, what's a cyber breach? Okay, well, it's only 1 week, but what about if it's a really important week? How do I know? Right. This is the one where it's more difficult. Okay, not as clean cut as that. Oh, it's 0.5%. How do I know? Well, I could think 1 week of the year is about 1.9%. Okay, well, perfect. That must be material. Well, it might not be, because what about if it's when they shut down at Christmas? Yeah. So you can see how there's a bit of a problem there. So I would say something like it's likely it's material because on average it's 1.9% of total assets. Okay, so that's the kind of thing I'd say. Right, but that's the harder level exams. Okay, the harder questions we might get. So they're not all like that. Okay, they are not all like that. Now, step 3. This applies only if you have said it's material. If it's not material, it can't go to this level. Okay, so you do not discuss this if the issue is not material. Okay, so it is material because it's 6% of profit before tax, and then it is or it isn't pervasive. Okay, you get 50-50 on this really. If you said it is pervasive and then didn't explain it, you might get half. If you said it isn't pervasive and then didn't explain why, you might get half. Most people say something like because it affects more than one area. That's what the definitions talk about. It affects more than one area. Okay, so if we went back to our level 2 accounting, we'd say, isn't that double entry? Okay, so the problem is it must have a fundamental impact. So it must be something that is really important. Not it. I kind of say it might change my opinion. What about it definitely would change my opinion? And if I had that difference in my opinion in my head, I'm like, okay, it must be something that's really important. Okay, not just it might, it probably would. Okay. So it must be something where you disagree with the whole financial statements. Now, that doesn't mean you disagree with every area, but you kind of disagree with how they look. So that might mean the presentation's completely wrong. More likely, it's going to be going concern. So if the going concern opinion and assessment was incorrect, that's a big one. Okay, so that kind of gives you the flavor we're looking at. It could be something where you end up refusing to give an opinion. Okay, so as I said, the opinions you're given are I don't agree with the whole financial statements, or I cannot give you an opinion on these. Okay, it's big, right? It would be a big problem. Okay. So going concern is going to be your most common one. Okay, that's going to be the one that pops up most. Again, that's going to be that they assess the company is a going concern and the auditors think they aren't. That's going to be your most common scenario. Okay, it's a massive impact. Okay, so that's what we're looking for. Now, if we looked at this same scenario and said, well, if instead of being a week, what about if it's all of the accounting records? But what about if it was 20%? Okay, and that's where we get a little bit more iffy and we're like, oh, not really sure where we're at here. Okay, but if it's something like this, what about if it's all the accounting records? Okay, do they have any backups? Are there any paper copies? Can I like take the bank statement and reproduce a lot of it and the cash receipt? If not, it's going to be an absolute nightmare. Okay, it's going to be a lot of money, a lot of fees, a lot of audit fees. Okay, and this is not really one that auditors are going to want to continue with. Okay. Now, that's not the only reason they would resign from this, but if you're getting to this stage, you're probably like, well, what am I auditing? Okay, so it's going to be a problem. Okay, it's going to be a problem. It's probably going to be a big one. Okay, it's going to be a big problem because all the accounting records. So this is probably going to be something we're going to go like, okay, this is a pervasive issue. Okay, this is a big problem. You're still going to modify the opinion itself. Okay, still going to modify it, and that's where we struggle with something like this because they're like, all of the accounting records definitely pervasive. 1 week of them probably material. 1 month, 6 months. How do I know? You need to just take a judgment. A lot of examiners will actually give you both ways. If you give a justification that's pretty good, they will give you the credit both ways. Okay, and that doesn't mean for everything. Okay, so if it was 1 day, they're like, probably not, unless it's the only day of the year they sell something. But if you said something like, and you had like 1 month, 3 months, the examiner's going to have to go, you know what, give me a good argument and you can have it, right? So you just need to follow that and say, well, if it's really on the fence, just go with one way, write an answer, follow the opinion. Okay, so I said we just don't know. Now, but either way, I said our opinion's already changed. It's just what it changes to. So we've decided some financial reporting. Then we've gone for deciding and looking at materiality. Then we've gone for, is it pervasive though as well? Okay, remember that's only if there's something where there's a modification to the opinion, it's material. And then the final bit we're looking at is then justifying the opinion. And this is the only things you would need to do in any written question. Okay, but you're looking for full marks, you need to do some more. Okay, and I'll show you that in a minute. But step 4, choose and justify. Absolutely justify your opinion. If you say it's modified, you'd be lucky if I try and give you any credit, but you might get half a mark. I'm looking for what is this specific opinion. Now, there are 4 opinions in total. So if it's not material, it's unmodified. Okay, as in I haven't changed it from the financial statements show a true and fair view. If I change it, then it's one of 3 things. Okay, if it's material, okay, if it's a material issue, just a material issue, then it doesn't matter what the circumstances, it's the financial statements show a true and fair view except for receivables. And I'll explain that later, right? That's what it says. Okay, so it would be what we call a qualified opinion. So it says qualified except for. Okay, and that's the wording that we typically use. Now that's if it's material and it stays there. Okay, so we have the 1 week of accounting records are gone, but we can kind of piece them back together with bank statements and other things. If it moves on though to and it's pervasive, this is where our opinion changes based on the nature of the problem. So if it's an error or a disagreement, it says the financial statements do not show a true and fair view, which makes sense because adverse, it just means kind of against or I don't agree, right? So error or disagreements, our financial statements don't show a true and fair view. Whereas if we have a disclaimer, okay, sorry if the video is in the way, the disclaimer says something to the effect of we cannot give an opinion, okay? It says we cannot give an opinion. That's not great, is it really? That must be, there's so much evidence missing. Okay. So qualified opinion could be errors, disagreements, or lack of evidence, but it's just because it's material. Whereas if it is also pervasive, then the opinion splits in 2. So in total, you're remembering 4 opinions, okay? Unmodified, qualified, adverse, and disclaimer. Now, that's getting you definitely passing every single question you could possibly do in reporting, okay? Probably getting you 80%, if not even 100% of the marks that you would really see, okay? But there are some extra bits we might need to do. Okay, so number 1 is we call it a basis paragraph. So it's the basis of qualified opinion or basis of adverse or basis of disclaimer opinion. So what that does is tell the shareholders and the other users why the opinion's been changed. So hence it's called the basis of our opinion paragraph, right? So hence the basis of a qualified opinion, but you'd have to say something to the effect of, and this would outline the reasons and the quantity of the impact of the error in trade receivables. Something like that. So that's in every single modification answer. Okay, when it's unmodified, well, the basis of our opinion is the basis of our opinion. They don't really ever give credit for that, even though in reality it's still there. But that 1 mark you'll get for the basis paragraph. A whole other video is about different paragraphs, okay? Because when and a rule to help you with this, I would say, is assume that anytime you're going to add a new paragraph, okay, not the basis paragraph, okay, but anytime you're going to add another paragraph, which is a material uncertainty paragraph, it's an emphasis matter, student favorite, or if it's a paragraph called an other matter or an other information paragraph, depending on the exam you're doing, those just assume they're an unmodified opinion, okay, and I'll cover that in a whole different video. In the UK, we have something called matters by exception or reporting by exception, which is where a company breaches the Companies Act 2006. And that's essentially where if there's a lack of evidence, this is an automatic extra mark, and we love it because a lack of evidence means the client hasn't maintained their accounting records properly, and therefore they breach the Companies Act. That's the director's responsibilities. So there's an extra mark in there for that as well. And then sometimes the initial like step 1 financial reporting stuff, there's another issue in there. So if it's an intentional problem, then not only an error or disagreement, if we see it's intentional, we might have to discuss the fraud impact of it and how that might build bigger issues, or if it's an ethical problem or a non-compliance with a law or something like that, there might be like a wider thing to talk about. But these aren't the common questions, okay? So these are additional things we might see. So don't let these muddle our kind of core basis of our understanding. So hope that helps. Step 1, financial reporting, most likely, discussion. Step 2, materiality. Step 3 is it pervasive? Step 4 is then what is the opinion and justifying why it's an opinion that we're given. And then step 5 is if you've got time, if you're feeling technical enough, if you want full marks, that's where you go with step 5. Thanks for listening.